Hello everyone and welcome back to a new video. Now because I'm a mortgage lender in Arizona, I get this question all the time. Which is smarter or which is better for my specific situation? Is it a 15-year mortgage or a 30-year mortgage? And my answer is always the same. It's neither. Just pay cash. I'm just messing around though. We all wish we can buy homes in cash, but the reality of most of us can't. Only 19% of homes in 2018 were actually bought with cash. And of that percentage, majority of those were investors anyway. So it's incredibly rare for the average person to actually buy a home cash. Plus, even if you can buy a home cash, it's usually smarter to finance it instead and take that money to actually invest in it so you can get some higher returns. But that's for another video. In today's video, I want to talk about the differences, the pros and cons, the good, the bad, all that good stuff in the great debate of which mortgage is better, a 15-year or a 30-year. And first off, you should subscribe to this channel. Just kind of saying. But anyway, which is better? Well, first off, both of them serve the exact same purpose, to eventually pay your home off. Now, the way it's actually done is what we are going to be discussing today. And with a topic like this, I mean, it's like religion or politics. No matter what I say, I'm probably going to be pissing off a lot of people. But let's just start with the pros and cons of each, and then I will tell you which is the superior option. So let's start with the 15-year mortgage, okay? The most blatant difference is the fact that you'll be paying your home off in 15 years, which is much shorter than the bigger brother of the 30-year, right? Now, if you're working with a lender that doesn't absolutely screw you into oblivion, then you'll get a much better interest rate with a 15-year mortgage versus a 30-year mortgage, okay? Typically, you get at least 0.5%, if not a little bit more. And the reason being is because the loan is just a lot less riskier, okay? Much less can happen in 15 years, say like lose a job, I don't know, having unexpected medical payments or whatever, than what can happen in 30 years. So not only are you paying much less interest over the life of the loan because your rate is lower, but also your term is lower. The biggest factor in how much money you pay in interest on a home loan is not your rate. I don't know how many times I've said this. The most money you spend in interest is not because of your rate, it's because of your term. For example, let's say I bought a $500,000 home and my interest rate was 7% on a 15-year mortgage. Over the course of those 15 years, I'd be paying $308,945.71. Now, on the flip side, let's say I bought that same $500,000 home and my interest rate was 4% on a 30-year mortgage. I'd still be paying $359,346.40 in interest over the course of that loan. This is why the biggest factor in determining how much money you are going to be paying in interest over the course of your loan is the term, okay? It's the term, it's not the rate. Which is really what pisses me off when people always complain about their interest rate. They say, oh man, a 3.75 interest rate isn't good enough. I need a 3.5. It's like, no, you just need to pay your home off quicker and you'll save tons of money. So bringing us back to the 15-year mortgage pros, you can see that you get the best of both worlds here, okay? You get a lower rate and a lower term, which means you'll be saving hundreds of thousands of dollars in comparison. So to put things into perspective, on a $250,000 home, you'd save around $150,000 in interest with a 15-year mortgage versus a 30-year mortgage. So we've got a smaller interest rate, lower term, and here's a new one, faster principal paydown, which basically means you are pretty much building equity in your home much faster. The faster you pay down equity, the less you spend in interest and the more cash you can get in your pocket when you go to sell your home before the mortgage is paid off. Building equity in your home is always the biggest goal, okay? So with the 15-year mortgage, you get a better rate, better term, better pay down. So it's essentially looking like the clear champion here. But hold up, pump the brakes. We got to talk about the cons of the 15-year mortgage, or better yet, the con. There's only one. It's the fact that your payments will be significantly higher, which sounds bad right on the surface, but it's much worse than you think. Now, when your payments are higher, that means you're going to have much less cash flow. What's cash flow? Cash flow is essentially how much money you get into your pocket each month. So lower cash flow sucks. We want millions of dollars hitting our pockets every single month. But the real reason it sucks is if you bought this property for an investment property, your monthly cash flow is going to be much lower. So you're barely going to be making anything, if anything at all, from having tenants actually live in your investment property. Or if you actually bought the home to live in it, this means that your debt to income ratio is going to be much higher because your monthly payments are higher. And I don't want to bog this video down with like lending qualifications and debt to income, DTI, like all this stuff, what it means, but essentially just know that a higher DTI, higher debt to income ratio essentially means you can qualify for a less expensive home. So with a higher monthly payment, your debt to income ratio is going to go up, which means the max purchase price you can actually, buy a home at is going to be much lower. Essentially, you have to stay below a certain DTI percentage to qualify for a mortgage. So let's use the example of 50% DTI. That means that if you make $4,000 a month, you can only be spending $2,000 a month in, like reoccurring payments, like, car payments, credit cards, student loans, all that kind of stuff, and your new mortgage. So if your mortgage payments are higher with a 15-year mortgage, that means your debt to income ratio goes up, which means to stay under a specific threshold of like the 50% mark, you need to either pay off other debt entirely, or you have to lower the purchase price of the home you want to buy. This is a huge deal breaker for like 90% of the people I work with who are deciding whether a 15-year or a 30-year. So let's go back to an example. Let's say $250,000 home on a 15-year mortgage. Your monthly payments are going to be $600 more on the 15-year versus the 30-year. That's a significant impact and a determining factor when you're deciding between a 15-year and a 30-year loan. And another thing I want to put in perspective here is if you're maxing your DTI out, like if you're really pushing the threshold of here's the max I can afford and this is the home I'm going to buy, that's not a very healthy lifestyle, okay? You don't want to be maxing out your DTI because that means that if anything goes wrong, if your hours get cut at work, if you somehow take a cut in salary, you're going to be really struggling financially. I personally recommend, and honestly what I do is I live a super simple lifestyle. I live way below my means. I save way more than I probably should. And in turn, I live a very stress-free life. I don't really have to worry about making sure I have the money to pay the bills because I live a very simple life. I don't spend more than I probably should. But all right, that's the pros and cons of the 15-year mortgage. Now let's take a look at its bigger brother, the 30-year mortgage. Well, right off the bat, as you can probably guess, your monthly payment is much lower. Again, by about $600 a month on a $250,000 home. So what does this mean? Well, our cash flow is going to be significantly higher than the 15-year mortgage, right? We're on the flip side now. So we've got more money coming into our pocket that we are not spending on our mortgage. So if that means that we've got an investment property, we're actually making money on this investment property now. And not only that, but we should be making a lot more versus a 15-year mortgage. So from an investor's standpoint, you could take that extra $600 a month that you're basically making from this by going to a 30-year route, and you can invest that into some higher yielding accounts, stocks, whatever you want to do, so you end up making a lot more money than if you were to aggressively pay down that 15-year loan. Or instead of investing that $600 every month, you could just blow it at a casino. Basically the same thing as investing, right? Anyway, with a lower payment, that means that you can essentially buy a nicer or more expensive home. So that's a plus for most people and is the biggest turn on for most people. Plus, you'd also probably make more money on it in the long run because let's say home prices go up 1% every single year. If you bought a $250,000 home, 1% of $250K is much lower than 1% of $300,000. So again, you're going to be building equity slower, but you'll own a more expensive home. So the more that home prices go up, the bigger that number is. I don't want to get too much into the weeds, but you'd make a little bit extra. But of course, nothing good in this world happens without some cons or something that's bad. So the downside to a 30-year mortgage is the fact that you pay the home off way slower, which means you pay principal off way slower, which ultimately means you build equity in the home super slow. Nobody likes moving slow, let's be real. Ultimately, this means that you're going to be paying much more interest over the life of your mortgage. You're going to feel it in the rate, you're going to feel it in the term, it hurts. But remember, your interest rate will be about 0.5% higher on a 30-year mortgage versus a 15. And remember, the biggest determining factor in the amount of interest you pay is the term of the loan. Those 30 years hurt. So on that $250,000 home price, you're paying hundreds of thousands of dollars more in interest, mainly due to the term. It's no fun, let's be honest. So here's the pros and cons matched up side by side with two mortgages, right? Looks like the 15-year is the clear winner, right? If you can afford the cost, right? Well, not quite just yet. I want to break this down even further. Here's what it looks like with an actual home price. Again, it looks like the 15-year is a clear champ, right? If you have the money. Well, I want to take a second to play devil's advocate here. If I say the 15-year mortgage is king, everyone's going to say, whoa, hold up, Shawn. If you made 3 extra payments every year on your mortgage, you'd be totally fine. Or an even better one is people say, well, hold on, Shawn. You didn't take into account for inflation and I need to go check my math and blah, blah, blah. You know, Shawn, because $1 spent today is only worth 54 cents in 30 years because of the 2% inflation rule. And yeah, you're 100% correct. I can't argue with the math. I mean, $1 spent today is worth a lot less down the line. So if you're holding off on paying your debts until later, essentially you are paying less, but that's also with no interest. And then on the flip side, if I say the 30-year is king, everyone's gonna be like, whoa, Shawn, what are you talking about? You're never gonna have a sense of security and wealth if you're always making payments on your mortgage. What are you thinking, man? Or my favorite argument is the fact that, whoa, hold on, Shawn. You can buy 2 houses with a 15-year mortgage for the price of 1 house on a 30-year mortgage. Pretty crazy to think about that statement, honestly, but that's besides the fact. If you want my answer to this god-awful debate, it's the fact that you need to know thyself and you need to know what's in your best interest. If you're super conscious in what you're investing in and you are confident you can get a 5 to 7% return on the money you invest that you save by getting a 30-year mortgage versus a 15-year mortgage every single month, by all means, prove us all wrong, go do that, make yourself some money, but I will be the first one to say that is incredibly hard to do and you have to stay super dedicated over the course of 30 years. I'm not saying it doesn't work. It does. It's just incredibly hard to make happen and the average person usually doesn't stick to it. On the flip side, if you don't know how to properly invest your money, get that 5 to 7% return over the course of all this time and have the will and dedication to actually do that, then I recommend just getting a 15-year mortgage. It take the headache and the hassle out of everything. Essentially, your money is just being invested into your home. You don't have to worry about anything. It's one payment. You don't have to worry about investing. It's so much easier. Will it be the best financial outcome? No, you can always get a better outcome than that. My absolute favorite answer to this great 15-year versus 30-year debate, is 1, pay cash, but 2, get yourself set up with a specific mortgage program that takes care of the hassle for you. There are programs that exist to actually pay your home off in 5 to 10 years, and there honestly isn't even any payment involved with it. It's pretty incredible stuff. I know my mind was blown. I sat through this super long training to actually get certified to do one of these specific loans because it is very rare. Most lenders can't offer it to you. It's pretty incredible stuff. I made a video on it actually down below if you want to learn more about it. It is very unique. It's very cool if you're actually serious about paying your home off as soon as possible. This program literally does it for you. But after watching this video, I want to know your specific opinion. Which is king? Is it the 15-year or the 30-year? Let me know down below. I'd be definitely interested to hear because this debate is always super entertaining to read comments on. And if you need any mortgage help or you're trying to figure out what's best specifically for you, then head on over to lending.shawnmalkou.com. Again, I'm an Arizona mortgage guy. I'd love to help you out. It can get a little bit confusing when you're trying to decide which program is best for you. So I get it, trust me. But hopefully you enjoyed the video and learned something from it. I spent tons of time on this, so if you could like the video, I'd really appreciate that. Also, subscribe if you're new around here. I'm always doing cool videos like this. If you've got a great topic that you want me to cover, let me know down below as well. Ultimately, I love dropping my 2 cents on pretty much any topic, so just let me know. While I'm plugging everything, might as well go check me out on all my social media channels at Shawn Malkou. But that is going to do it for today. Hopefully you did enjoy the video, learn something new, and until next time, I will see you in the next video.